Surjit Pal, Associate Vice President with the Pharma Vertical with Prabhudas Lilladher, joins us live with the take on Ranbaxy. Surjit, good morning and thank you for joining us. Surjit, by now I'm sure you must have done your numbers on the actual EPS, the damage to Ranbaxy because of this latest USFDA ban.
See, this would be too early to guess at this point of time, but what I can tell you for sure is that they are currently having $120 to $130 million of revenue per quarter from US, and that is mainly getting from home labs. Now, for that home labs to manufacture formulation, they have around 70% supply from Kanhaiya API plant. So I think that business would have impact. So in this kind of tough scenario, a company generally what to do is that they want to save the sales first. So if they want to go for saving their sales, then they have to go for outsourcing API, which means that there will be additional cost pressure on the operating level. Also, this API plant of Kanhaiya is included in your consent decree, which means that additional consultancy costs too. So put together, I think this company will go down to the operating loss level post this scenario. And they have, considering they have only two geographies profit making, one is US, one is India. So India remains where it is, but US one of the big contributor in their profit going down the drain. So I think definitely it will have impact of operating level negative.
So what is your understanding? Based on the latest news development, can Ranbaxy not export to US at all? Because if they don't have a APA approved facility, what will you export? Yeah, I mean they can manufacture. Their home labs is still approved, so they can manufacture formulation and selling in US. So they will outsource API from a third party who has already USFDA approval for those APIs.
Do you expect significant derating now to start trickling in?
I think the worst I could expect. That is one. Second point is that this would also extend to the level of they have the three big price, which is FTF for Valspax, for Diovan, and for Nexium. Now these three big products, our estimation is 80 rupees EPS to be added. Now that will also bring to zero. So I think if USFDA don't withdraw FTF status for Ranbaxy on these three para 4 drugs, then Ranbaxy has no other option but to fall back to the option of outsource API, which means their EPS estimation of 80 rupees will be less than half now. So that is second. Third point is that I think in this scenario people will not discount even the earnings estimation from FTF because that will also consider that will be withdrawn, assumingly. So I think anything between 200 to 250 will be buyer. So I'm expecting, downgrade in price to that level.
250 to 300, my friend. Ranbaxy closed at 410, so you expect it could go below 300. Okay, we leave it there.